We have Professor Ra from Pukyong National University, who will talk about money industry in Indonesia. And without any further ado, I will give the floor to Professor Na. Thank you.
Ask a couple questions. Hi everyone. I'm Professor Ra. I'm so happy to be here to have a lecture on money economic policy in Indonesia. I was announced that I was given a 2 hours lecture, but today I just had 1 hour 50 minutes. I have to shorten my lecture, so please I ask you for your understanding. So this is nice to meet you, right? Indonesia. Senang bertemu dengan Anda, right? Nice to meet you. Today's topic is like this: table contents, money and economy, and second is government and policy. And probably I can explain about the case of Indonesia, relevant, using the relevant statistics or data on this topic. If I have time, we can see the South Korea and United States as well. So money and economy, I divide this topic into three: the background and history and money creation. I want to talk about first the background of money and economy, and I put some small topics like this, and 4 topics in this case. I prepared my lecture notes, so I follow this lecture note. So first, finance capitalism. As you know, the capitalism began to develop in New Land, and it became the dominant economic system from the 19th century. But capitalism has changed with the times. The capital is a bunch of money for business or investment. It's not just the money, right? Was supplied as much as was necessary for business, investment, and expansion of production power. Up to the early 20th century, the gold standard system continued, and the increase in the money supply was dependent on the quantity of gold reserves. That is the gold standard system, right? As long as the productivity does not expand rapidly, the gold standard system can continue. However, the rapid expansion of the capitalism brought about the demand for capital, which further required an increase in the money supply. The gold standard system failed to keep up with the surge of money demand because the money supply was constrained to the amount of gold reserves. But that was a serious problem for the sustainability of capitalism. After the Great Depression in 1929, United Kingdom first abolished the gold standard system in 1931. The United States in 1934 as well. That means the central bank was liberated from gold reserve and made an independent money supply possible. Now capitalism is freed from the gold reserves and began to change from industrial capitalism to financial capitalism. In finance capitalism, the role and influence of finance is more important and greater than ever. So do you know what is finance? It may be difficult for you. It would be easier to understand if I say bank instead of finance, right? Bank is a financial intermediary that connects money demand and money supply. Bank operates as the important economic actor that may affect the life of individual, national economy, or even the world economy. Therefore, in order to understand the finance capitalism, we need to understand the mechanism, how the current banking system operates. The second topic, economic growth and money demand and money supply. First, I want to talk about money. Money is the basic of basics for the whole economy. Money is a method to discern credit-debt relationship among people, but we need to think about the relationship between money and the economy. Maybe this is more important than thinking about what money is, because if money affects the economy, it also affects our lives. We want the economy to grow, right? This is because the economy must grow for our income and jobs. The expansion of capital itself means economic growth. Economic growth is the purpose of modern capitalism, or otherwise capitalism cannot survive. Also, economic growth means that the increase in dynamics of economic activities. More production, consumption, and investment means the economy is strong and the credit-debt relationship among people get bigger and bigger. And also it means money demand, borrowing and lending also increases as well. Therefore, the increase in money demand due to economic growth. In other words, the expansion of capital leads to the conclusion that a corresponding money supply is necessary. If there is no corresponding money supply, the economy will not grow. Here, we need to understand money supply is money creation, because money can be created at almost no cost, even no cost. In modern society, since money can be created without limit through central bank and commercial banks, there is no concern about a shortage of money creation to meet money demand. Whether the problem may be the boom and bust, that is rapid expansion and contraction of asset values due to the huge and irrational money creation as you see these days. In order to create money, there is no need to print physical cash. Only thing to do is put numbers into borrower's bank account by simple keyboard operation. With the development of digital and IT technology, all information on borrowing and lending is electronically recorded and saved on bank server. The money creation is theoretically infinitely possible with just the computer keyboard operation. However, in pre-modern era, no current technology, it was not easy to create money in time, response to money demand. So third topic, deflation. So what will happen if money supply does not meet money demand? If money supply or money creation is limited, the money value rises. We call it deflation. Let's take a simple example. If the output in the economy is 100 units and the money supply is 100, the relative value of goods and money is 1 to 1. So the price per unit of good is 1, right? Now the output doubled to 200. If the money supply is the same as before, the relative value of good and money is 2 to 1, right? And the price per unit of good is 1.5. The price was 1, but now it is half to 1.5. In other words, the price was $10 before, now $5, right? If you are a producer, you can make only $5, not $10. Then you will not happy, right? If this situation affects the overall economy, the business will shrink. Producers lose the incentive to develop technology or increase productivity and output. We call this deflation. Deflation is a situation in which price level in the economy generally falls, and consequently, economic dynamics get lost less and less. So maybe the main concern of capitalism is deflation, not communism, I think. Then in order to prevent deflation, appropriate money creation is necessary to meet the increase in output and money demand. In the above example, if the money creation is also increased to 100, the price does not change. What if money creation by more than 200? If money creation is 300, the price will increase by 50% from $10 to $15, right? This kind of overall increase in the price level is called inflation. You can earn more money as the price rises, so the economy is booming. This is why inflation is better than deflation. Of course, too much inflation has side effects. So central bank wants to keep the inflation rate at reasonable level, around 2% per year. This is the reason why Bank of Japan desperately tries to break out of deflation and generate inflation like Abenomics after 2010s, right? Today, as I said, central bank and commercial banks have no constraint in money creation. However, when metal money, such as gold and silver coins were used, it is not easy to provide enough gold and silver coins to meet the money demand. So next, the seniorage. To provide more gold and silver coins, mining is one way, but there is another way. This is easy if you can just cheat. This method is known as seniorage. Senior is a Latin word used in France, Italy, and Spain, referring to the lord or king of the castle. It means the profit that kings and lords intercepts by money corruption and adulteration. In the Middle Age of Europe, kings and lords mint bad money intentionally lowering the content of gold and silver in coins. For example, by halving the amount of gold to make a gold coin, you can make 2 coins out of 1 coin, right? The difference between the nominal value and real value of money is called the seniorage. If the nominal value of gold coin is $10, but its real value is $5, the difference, $5, is a seniorage. Since the Middle Age, feudal kings, lords have enjoyed the seniorage by making golden coins in this way. Seniorage seems illegal or immoral, but if we think about the reason of deflation, as I said, money creation by seniorage would be inevitable or necessary to meet money demand for economic expansion. It is ironic that this immoral trick, seniorage plays a role in supporting money creation and led money to commodity, money to current legal tender. It contributed to the evolution of money. However, no matter how big the seniorage is, it could not keep up with the money demand in the era of mass production, consumption after the Industrial Revolution. The rapid expansion of economic activities, along with the development of transportation, communication, and transaction, has structurally made it impossible to maintain stable value of commodity money. Capitalism needs something different. So next part, history. First topic is commodity money versus legal tender. After a long period of trial and error, and the commodity money has come to an end, and the legal tender has arrived. Legal tender is the money whose value is guaranteed by the government, even if the money has little value, real value. The banknotes and coins we see today are legal tender. Banknote is really just a piece of paper, right? But $1 bill guaranteed by the government will have the value of $1. If you have $1 bill, you can pay for something worth $1 in the market. Also, legal tender can be divided into 2 categories. One is convertible money, in which gold exchange is guaranteed, and the other is non-convertible money, in which gold exchange is not guaranteed by the government. So second topic, convertible money versus non-convertible money. Money has evolved in order of convertible money like gold coin and convertible money, and then non-convertible money. Currently, the money we have is non-convertible money. The value is guaranteed by government, but gold exchange is not guaranteed by the government. Convertible money, which was guaranteed to be exchanged with gold, was used up to the early of 20th century. Convertible money are printed with the government stating that they are guaranteed to be exchanged for gold or their nominal value. This means that the owner of the note can exchange for the same value of gold at the bank at any time. Prepare the picture. This photo shows convertible money and non-convertible money, $10 bills. The above one is convertible money, and the below one is non-convertible money. If you look at the bottom of the convertible money, convertible money, of the above one, there is a sentence underlined with the yellow. The sentence underlined with the yellow line, right? The sentence is small letter, so you cannot see exactly right. But it says that gold coin payable to the bearer of demand, right? But you cannot find this sentence on the non-convertible money below, right? So you can the convertible money you have the convertible, and you want to change the exchange to the gold. You go to bank and ask the change the bill to the gold. Then the bank have to give you gold coin, $10 gold coin. But the below one, bank doesn't necessarily don't have obligation to give you the gold coin, $10 gold coin. That is the difference between two monies. The convertible money came to an end after the Great Depression. The World War I, excessive money creation, to finance the war, the chaos of Great Depression and hyperinflation in Germany led to a surge in demand for gold. As trust in government has collapsed, so trust in money has collapsed as well. The third topic is gold standard system. In the gold standard system, gold reserve is base of money creation, banking and finance. So go around the gold. Gold is like the sun, which is the center of the universe. It's not the fact. Anyway, we imagined it, right? But the gold standard system was not able to meet the expansion of capital. The United Kingdom officially abolished the gold standard system in 1931 and United States in 1934. The exchange rate between gold and dollar is set $35 for 1 ounce of gold. 1 ounce is around 28.35 grams. This means that if you bring 1 ounce of gold to the bank, it will be exchanged for $35, but not vice versa. There is one more unit to note here. At the domestic level, gold standard system was abolished in the 1930s like this, but the international gold standard system was officially abolished in 1971, nearly 40 years later. The official means of payment among countries like international trade was still gold, because in international politics, no world government exists, no world police officer exists, so the gold was the most reliable and final means of payment. Let's talk about how international gold standard system was sustained until 1971. In July 1944, representatives of 44 allied nations, including the United States and United Kingdom, gathered at Bretton Woods, one of small town in New Hampshire. The most important agenda was what to use as a payment method for international trade. This is a photo of the conference at Bretton Woods in 1944. The guy and the right side photo, you can see two people. The guy on the left is Harry Dexter White, the representative of the United States. And the guy on the right side is John Maynard Keynes, the representative of the United Kingdom. They are looking at each other with a smile, but in fact, it probably was not like that in minds. Keynes, representative of the United Kingdom, proposed to create a new money called Banco. Banco means in bank in France, so Banco, and use it for international payment. However, White, the representative of the United States, insisted that the money for international payment should be the dollar of the United States. In the end, the claim of the United States was accepted, and the money for international payment was set as a dollar. The exchange rate between the dollar and gold was set at $35 for one ounce of gold, as was in 1934. The exchange rate between the dollar and the other currency has been set at the rate agreed between governments. In the end, only the United States dollar was recognized as a comfortable legal tender that was guaranteed to be exchanged for gold on international level. This international converter system between gold and dollar is called Bretton Woods system. The Bretton Woods system was founded on the trust in the United States the superpower after the Second World War. As the United States, we play the role of the world government or police officer, so the dollar played the role of the world's legal tender. However, this is based on trust in the United States hegemony. So it is natural that Bretton Woods system does not survive if dollar cannot be converted into gold promised. So next, the Nixon shock in 1971. Sure enough, Sure enough, the fear became a reality. In 1950s and 1960s, the United States made huge expenditures for aid at war, such as Marshall Plan for Europe, Korean War, and Vietnam War. To make matters worse, the trade deficit of the United States got worse and worse. Over time, other countries began to have a doubt that the United States was printing too much dollars relative to its gold reserves. If you print out many dollars compared to the gold you have, the real value of the dollar will fall, and the confidence in the exchange rate of gold and dollars will collapse. Switzerland, Spain, France started to demand the dollar conversion to gold and withdraw large amounts of gold from the United States. It resulted in a sharp decline in gold reserves in the United States. Eventually, on the morning of Sunday, August 15, 1971, United States President Nixon announced a suspension of dollar convertibility into gold. Finally, the Bretton Woods system collapsed. Now the international gold standard system, which was maintained on the basis of trust in the dollar, has disappeared into the dark side of history. What will now take the place of the world standard money instead of gold? The last topic, the dollar standard system. The answer is dollar. Ironically, the dollar has taken the place of world standard money instead of gold. Many problems and criticisms exist, but because there was no alternative, the exchange rate between currency of each country could not be fixed. The fixed exchange rate system has gone. Free-floating exchange rate system has come. This was the beginning of the international monetary and finance system, dominated by instability, as you see now. Now, the dollar, only created by the Federal Reserve, the Central Bank of the United States, has become the world standard money. With the Nixon shock in 1971, the era of the international gold standard and convertible money system collapsed. New era of dollar standard and non-convertible money system opened up and to be continued. And I want to talk about the money creation. First, here our base or how high-powered money. First, fake quasi-credit money. Now it is time to talk about money creation in detail to understand the current monetary system. You would think that money is all the same money, but that is not true. Money can be divided into real money, non-perishable money, and fake money. Perishable money. What is real money? Real money has two branches. One is cash, such as banknotes and coins issued by the central bank. The other one is reserve money, deposited in commercial bank accounts opened with the central bank. The sum of this cash and reserve money is real non-perishable money. It is called the base money or high-powered money. We denote this money as M0. It literally means the root or source of the monetary system. And second topic, central bank money creation. The base money is a 100% reliable money that actually exists or is guaranteed to be exchanged with cash by the central bank at any time upon request of commercial banks. As long as the country does not perish, the money created by the central bank will never disappear. It plays the same role as gold on the gold standard system. The third topic is commercial bank money creation. Then what is the fake money or quasi money or credit money? It is created by the commercial banks. Commercial banks, backed by the central bank, work hard to create money. Most of this money is created through credit, borrowing, lending. Commercial bank creates money from nothing, just like central bank money. The difference is that while the central bank's purpose of money creation is stabilizing the monetary system, whereas the purpose of commercial bank is to make profits by lending money. To understand commercial bank money creation, let's say you start a business. For business, you need money, capital, right? How and where can you get this money? You can borrow money from individuals, but generally you go to commercial banks such as Kumin Bank, Uri Bank, and Hana Bank on the street. Commercial bank evaluates the collateral and your credit rating and lend the money. The more collateral or the higher the credit rating you have, the more money you can get. There's one question here: where does the commercial bank get the money and lending? The answer is easy, and it is kind of open secret of finance capitalism. Bank just lends money. Bank lends money out of nothing. Through loan, money is created. Loan leads to money creation. Bank can lend money as much as it wants to. And bank loan does not depend on your saving. Let's talk a little more about this specifically. When person A comes to bank B to apply for a loan, bank B evaluates credit rating or collateral. Bank B does not check how much deposit or saving it has. When the loan is decided, bank B puts the money, it's just a number, right, in a bank's account, in A's bank account. As you see here, it is not the order of deposit and then loan, but the order of loan and deposit. Only if there are borrowers, this process of money creation takes place every day. This is commerce bank money creation. This process is done very quickly and at almost no cost, thanks to modern IT technology. All you need is a loan application form and a few minutes for a banker's computer keyboard operation. The money creation can be $1 million, $1 billion, even $1 trillion, or even bigger. Banks can create massive amounts of money with a simple keyboard operation. It is literally like creating something out of nothing. Only God creates from nothing, right? Thus, bank is the kind of God of money in this sense. This is the cornerstone of the current banking system and financial capitalism. The creation of money by commercial banks is possible because there is central banks such as Federal Reserve, Bank of Korea, Bank Indonesia. The central bank is a bank of banks, bank of government, and it acts as a lender of last resort, and it allows banks to create money through loan. In the past, gold was standard money. Now central bank itself seems like standard money. When a bank is in the crisis, the central bank plays a firefighter providing money to bank in the name of finance stability. In this manner, the dual structure of central bank and commercial bank is the foundation to the current banking system. And fourth topic, the central bank money versus commercial bank money. Even though they may seem like the same money at first sight, the central bank money and the commercial bank money are different. Central bank money, such as cash, exists in your wallet, right, or in your pocket. Commercial bank money exists as a number in your bank account. In this way, the infinite creation of commercial bank money brought about economic wealth through maximization and productivity and efficiency. However, as the money creation pursuing of greed would be irrational, the extreme and unbalanced expansion of money creation becomes a reason for periodic depressions, panics, and instability in the economy. And five, free money. We understand that commercial banks only can create money through loan, but there is one exception, that is free money. Free money is created with dollar exchange. For example, when you export goods and services and get paid by dollar, you will request dollar exchange for like Korean won at the bank, right? Then the bank will put the money in the Korean won into your bank account. Money can be created without borrowing and lending in this case. This is money creation without loan. In other words, debt. The more free money means more debt-free economic activities. It means that your country and your life become better off. This is the reason why many countries including Korea and Indonesia, emphasize the importance of exports and FDI. Only exports and FDI is the safe and secure source of dollar. That is free money. Okay, and next, let me talk about the second part, the government policy, right? The first topic is zero interest rate policy and QE. QE is quantitative easing. Now we turn to government policy regarding money. That it would be two: government's fiscal policy and central bank's monetary policy. These policies are recognized as separate and independent policies, but I would like to point out that these two policies need to be integrated or operated together as we need. For example, QE, quantitative easing, is one of the monetary policy to prevent economic crisis. It refers to providing real money into commercial banks, governments, and financial market by buying assets such as government bonds, housing mortgage bonds, and even corporate bonds. QE is referred to as an unconventional monetary policy in contrast to traditional monetary policy, such as lowering interest rate and open market operation. But if the interest rate is lowered to the bottom, zero, the central bank needs to purchase financial assets directly as a last resort. Especially after the recent COVID-19 pandemic in 2020, major countries, United States, EU, and Japan, returned to quickly zero interest rate policy and QE. QE seems to be complicated, but it is simple. The central bank creates money and put it into commercial bank account in response to the crisis. In economic crisis, it is difficult for commercial banks to create money because there's no borrowers, because the economy is very, very difficult. It is difficult for commercial banks to create money, so the central bank creates the real money instead. That is QE. As I said, it's done by typing in numbers by keyboard operation, just like commercial bank money creation. This, let me see. This is a number. So do you guess how big? The upper one is $3 trillion. $3 trillion, and the below one is $4 trillion. How many zeros? Many, right? 12? Right? Okay. Anyway, 3 trillion and 4 trillion. That is the amount of QE in 2008 and 2020 in the United States. It is huge amount of money because actually the GDP of Korea is $1.5 trillion. For Indonesia, as I know, it's just 1.1 trillion. So it is 5 times, 4 times, or even 7 times, 8 times bigger than the GDP of Indonesia, right? So it's a big, very, very big. We cannot imagine how big this is. So number over is the total of QE in 2008, $3 trillion, and number of below is the amount of QE in 2020, $4 trillion. The increase in the central bank money gives the commercial banks more room to increase their lending, which is turned to more money creation. When commercial bank money creation increases, it will help to boost the economy as well as asset values. And the second one, global economic crisis in 2008 versus COVID-19 pandemic crisis in 2020. Let me explain it a little bit more. In September 2008, when the global finance crisis began, the Federal Reserve purchased large-scale financial assets such as treasury bill and mortgage-backed securities and put the money into commercial banks to prevent the vicious cycle that finance crisis could further expand the other sector. And again, more than 10 years later, the COVID-19 pandemic crisis started in the early of 2020, and it brought the central bank to the front once again. But in this case, it was different from the finance crisis of 2008. By pandemic, the borders are closed, the daily economic activities such as production, logistics, and consumption on a global level has disrupted or collapsed. It was a very serious situation. Such a macroeconomic crisis will inevitably bring a finance crisis. The 2008 crisis started in finance and spread to real economy, whereas the 2020 pandemic crisis, the crisis in the real economy spread to the finance sector. In the face of pandemic crisis, the governments had to mobilize huge amount of money to defend against the spread of crisis. There was no way to sustain the economy other than the government's fiscal spending. Now the question is how to finance this unexpected huge governments of expenditure. It was not possible to use time-consuming methods such as expanding tax bases and tax revenue. A realistic option would be to finance the money by issuing new government bonds or directly borrowing from the central bank. Therefore, despite the burden and the criticism of the increase in national debt, it was inevitable to pour the government money into economy. In this way, in the context of pandemic crisis, the central bank directly purchases government bonds and create the central bank money and put it into government's account as well as commercial bankers' account. Of course, the process was done with a simple computer keyboard operation. It just take maybe a few minutes or a few seconds. Right? In fact, to overcome the pandemic crisis, Federal Reserve put a total of this $4 trillion central bank money into the government's account in this way. The United States government was able to use this money to make various fiscal expenditures to overcome the crisis. Government of the United States spent $1 trillion on a paycheck protection program called PPP and $3 trillion on subsidy for small and self-employed businesses. These fiscal expenditures by government have saved the lives of American people, supporting the economy and jobs. And third one is modern monetary theory. We call it MMT. I want to talk about MMT. MMT is a radical and a controversial money theory because it is aiming the democratic use of money. MMT claims that governments need to have the power to mobilize money from central bank. MMT claims the director take over the government's debt by the central bank. Government can do many things for people and public. National investment for public are neither costly nor wasteful. If tax revenues alone are not enough to beat expenditure, the government raises money through the issuing of government bonds. Central bank buys the government bonds directly. This is called monetization of government debt. Fiscal policy and monetary policy become one. Monetization of government debt has been taboo in economics community, but was surprisingly introduced already in pandemic crisis, as I said, in the case of the United States. It means other countries can also consider and do the monetization of national debt if necessary. And last topic, sovereign money theory and government money creation. There is a theory that moves one more step. It claims that government should be given the money creation authority. This is called sovereign money theory. According to the theory, not only the central bank, but also government can create money. Then government can make money without selling government funds and borrowing money from the central bank. In other words, government does not have to borrow money by taking on debt. It is a story that a democratic government must also have the right to create money for people. Historically, the claims of sovereign money theory are not so strange. Before the current central bank system was formed, the right to money making was monopolized to a few people like kings and lords. We can say they are actually the government at that time, right? But as a capitalist class emerged as the central force of political power in the modern nation state in Europe, the authority of money creation was transferred to the central bank. The first central bank, the Bank of England, was established in 1694. Since then, only the Bank of England has come to have the authority to issue legal tender. This leads to the modern monetary system in which the central bank has the right to create base money and commercial banks have the right to create credit money. As I said, now in the era of democracy, the money creation by the central bank and commercial banks must fully contribute to the welfare of the people, not the king or the capitalist. After the overthrow of the monarchy and the establishment of a democratic political system, we need to think about where the profits through money creation, that is seigniorage, actually should go. This is a very controversial topic because it is a big challenge to the current banking and finance system. But as I said, some part of the theories have been realized in the United States. Also, central bank can open an account for each citizen and the event of an unexpected economic crisis, such as COVID-19 pandemic. Central bank put the money directly into this account to save people's life. Anyway, to deal with the problems of finance capitalism, I believe this is a good time to study the alternative policies like MMT and sovereign money theory, so the mechanism of money creation can contribute to the welfare of the people and public. Okay, this is the graph of the asset of the Federal Reserve of the United States. The graph on the left side shows the Federal Reserve's the QE and the asset purchases. The asset was just below $1 trillion before 2008, right? Just below $1 trillion. But by the QE, the asset size reached to maybe 9, right? Almost, no. It's a little bit different, but anyway, in left side, you can see it reached to around 10, more than 10, right? $2 in 2021, right? It increased very rapidly. The graph on the right shows the composition of asset of Federal Reserve. The QE was done mainly by the purchasing MBS, the purple color in 2008, but 2020, it was the treasury bill, the brown color, the government bond was the main of the Federal Reserve, the purchasing. As you see graph in developed countries, and okay, this graph, you can see lots of the countries and the balance of sheet because the asset, the percent of asset, the ratio to GDP. In developed countries like Norway, Switzerland, Japan, Singapore, the EU, and right, the asset size of central bank is increasing, right, and it is big. But other countries, like developing countries, a little bit small, right? How about Indonesia? Indonesia is just 1%, it's very small, right? So it means there is big room for the Bank of Indonesia Bank, right? The Central Bank of Indonesia have big room for doing the policy for like QE. If there is some kind of crisis again, right? And so let me talk about the case of Indonesia. Maybe all of you are from the Indonesian people, so maybe you are very interested in this case. As I said, MMT was introduced already in the United States. Do you know Indonesia have implemented MMT? Yes, Indonesia did it. In July 2020, Bank Indonesia, the central bank, openly launched the direct purchase of government bonds. It is the act of buying directly from government. Bank Indonesia decided to bear a 40 billion out of the government demand, $63 billion. It is one case of MMT, monetization of government debt. I really highly appreciate the Indonesian government and central bank made such a bold and difficult decision. I believe that Indonesia played a leading role in integrating fiscal policy and monetary policy for the people and public. And next, I want to share kind of the statistics or indicators relevant to the topic we discussed. You can see the interest rate, the base interest rate is coming down, right? And the asset to GDP, on the right side, the asset to GDP ratio rises significantly in 2020, right? There's a hike, right? This implies that QE has been implemented, as I said. You can see M1, another index of month-to-month creation, is increasing rapidly after 2021. Right? So there's big change in 2021, right? It means there is a kind of money creation. It's an additional money creation at the time to deal with the economic crisis. And the free money, international reserves, is growing, but around 50% of GDP. I think it is not enough because Indonesia, the export and FDI is very important for economy, right? So I think the free money, international reserves, should be going up. Current account deficit is going on. Indonesia needs to have current account surplus to get free money. FDI is rising up, especially in 2020. I think it's a good sign for the economy and get free money. And government debt, except the case of crisis in 2008. No, the GDP growth rate, right? So the government debt to GDP is going up after 2020. Right? It's slightly going up, but still very low level, just around 40% of GDP. In the case of developed countries, the average is more than 100%. And for GDP growth rate, except of crisis, in the case of crisis in 2008 and 2020, GDP growth rate is around 5 and 6%. And I think it is very solid and sound. In the case of South Korea, base interest rate of BOK, Bank of Korea, also is lowering, is going down last 10 years. The size of asset of Bank of Korea goes up steadily, but does not show any dramatic change like United States and Indonesia. It means Bank of Korea did not do large scale of the quantitative easing like the United States and Indonesia. M1 increases slightly rapidly after 2008 and 2020. It means there was additional central bank money creation to face the crisis. And free money, international reserves is going up very fast. After the year of 2000, right? And goes up to $400 billion. It is around 25% of GDP. I think it is not bad, but still not enough considering the economic size of Korea. Because Korea also export a lot and get FDI also a lot. Current account surplus is continuing, but needs to earn more current account surplus to get free money. FDI is rising up with some kind of fluctuation, volatility. But I think it's a good sign for the economy. The GDP growth rate is going down gradually to around just 3% now. And government debt to GDP is rising up significantly after 2020, but still lower level, just around 40% of GDP. In contrast to the low level of government debt, private debt is not good. Private debt to GDP ratio is rising very fast to 230% to 208%, especially after 2020. The slope is very steep, right? And this is a big problem of Korean economy and Korean people, and a heavy burden on people's lives. And household debt to GDP ratio of Korea is over 100%, but that of Indonesia is just around 17%. It means people of Indonesia have more chance to challenge more economic activities in the future. How about the United States? The graph on the left side, the base interest rate. The base interest rate is going down, right, to zero levels after the global financial crisis 2008 and the COVID-19 pandemic crisis in 2020. But now it's going up to deal with the inflation, right? The graph on the right side of asset, we already take a look at this graph, right? The Federal Reserve asset have a big change 2008 and 2020. And M1 increases dramatically after 2020. All right, you can understand what's the meaning of this graph now, right? It means there was huge amount of central bank money creation to face the crisis. The money flew to the economy directly to save America's lives. United States does not need to have interest reserve, right? The dollar, because the Federal Reserve, they make the dollar. The dollar index is rising up in these days, showing the power of dollar. Get strong and strong. The current account deficit is continuing. Another way to provide dollar to other countries that are good at exporting. FDI is rising up with some volatility and fluctuation and fast after 2020. I think this is evidence of making United States center the supply chain instead of so-called global value chain. GDP growth rate is sound. It is around 3 to 5% during the last 40 years, except several periods of crisis. Government debt to GDP is rising up significantly after 2008 and 2020, now up to 140% of GDP. In contrast to high level of government debt, private debt to GDP ratio is stagnant around 220% during the last 10 years, especially after 2020, the ratio goes down. I think it is the result of the QE. Maybe it's result of QE and central bank money creation to save people's lives. Household debt to GDP ratio is also going down from about 100% to about 80%. It is a good sign for people's economic activities in the future and people's lives. So this is my conclusion. First, now you may understand the money is not all the same money. This is the first step to understand the current banking and finance system. If you do not know what it means to divide into central bank money and commercial bank money, you would not be able to make rational choice to face an economic crisis that may come in the future. Second, it is meaningful just to know that the central bank creates money when the economy is in trouble, but the commercial bank money creates money when the economy is good. it is important to know why the central bank money and the commercial bank money should be distinguished and what the relationship between the two. Money creation by central bank and commercial banks plays a key role for economic growth, but excessive and unbalancing money creation brings about the tragedy of the finance capitalism. For example, the concentration of money toward the financial asset market eventually causes the asset value to explode and contract again. Many financial crises and economic crises in the past were caused by the money moved into the asset market and the resulting rapid expansion and contraction. The third, the global economy is closely linked to the international financial market, and that the international financial market is determined by the direction of monetary policy of Federal Reserve of the United States, just as the Earth and other planets in the solar system go around the sun. The world financial market goes around the Federal Reserve's monetary policy. Because Federal Reserve only creates dollar. Dollar is a standard money in global sense and the blood of the world economy. Federal Reserve is not simply the central bank of the United States. As long as the United States has the hegemony, the dollar is a key to economic development and prosperity. Finally, this is the conclusion. More dollar, more free money, more room for good fiscal and monetary policy for public investment and people, and more prosperity. It is the reason why we Korea, Indonesia are doing best to earn dollar through export and FDI. So for us, this is a way to go. This is my lecture. I hope my lecture helped you understand the money, economy, and policy. Thank you.
We have some questions. And preparation.
I give some questions, sir. I'm sorry.
Yes, you can ask your question.
Thank you. Okay, my name is Putri Gina. I have some question, and the first is how to people in the world can prepare, because we know we live in the transformation, globalization is so fast, and sometimes I think if we have just planning, if we action is so different like that. And my second question is how to Korea can help their people, because we don't know about our future and our how to economics can change so fast. And in Korea especially, have researchers and political can sound is so there can is some forum for idea for change in the future about economic. Thank you so much. And I'm sorry, I'm still learning English. My English still. Thank you, sir.
Okay. I just want to answer questions. The capitalism, today's capitalism has the enough power, production power, to have good life to all the people. The problem is the people don't have enough money. that is the problem, right? So we the policymakers and the scholars have to study about this dilemma. We have enough production power but it actually, in reality, there are many people who don't have the money. So as I said, this kind of policy, the QE and MMT and sovereign money theory is the kind of alternative to make a bridge for this gap, right? So I wanted to propose this kind of suggestions to Korea and Indonesia as well. Maybe you will be all of you will be the leader, opinion leader and political leader in the future, right? So you need to consider and think about how we make bridge between these two kind of dilemma. Thank you.
We have a question in the chatting box. Maybe just okay.
Thank you, sir. Can answer my question because like overthinking in the future. Thank you so much.
Okay. Let me see.
Okay, thank you, Professor Hee Ryang. I would like to ask you and thank you for the presentation. Prof, in Indonesia, we have a bank Indonesia to control the printing of rupiah and the distribution of money, supply and demand. I'm not familiar with Korean system. Would you like explain who control the money, who is the authority, the institutions, and what are the Korean government effort to balance the supply and demands? Thank you.
The authority of monetary policy has the Bank of Korea in Korea as is the same. I believe that the authority to make monetary policy is up to the Bank of Indonesia, right? Has the right, the authority to make the monetary policy in Indonesia. As same Korea, the Central Bank of Korea, Bank of Korea has the authority to make monetary policy, and there are 6 people to make a monetary policy. And actually, the monetary policy is kind of independent to the government. If the Bank of Korea make the monetary policy, government cannot intercept or make an influence on the decision making process. Okay. But I don't think that is enough. They have to make they have to, the government and Bank of Korea, they have to make the monetary policy just not for the finance system, but for the people or public. Okay. I'm sorry. My answer is not enough, right? Okay.
Okay, I believe this is my turn to ask a question. First and foremost, thank you for your broad and extensive explanation before, sir. Okay, straight to my question. As you have mentioned before, like the background and history about money and economic in general and how dollar standard system was set up until right now. However, recently I've heard about global economic crisis that will happen in next year, like in 2023. And from what I see, it was because Federal Reserve of America prints so much money that it caused an inflation. Therefore, they're trying to fix this with high interest rate. Thus, my question is, does this crisis will affect money creation in general? And will Indonesia and Korea got affected too? I'd like to know about your view on this. Thank you very much.
Okay. Yes. Many experts expect there is kind of crisis again in next year because the interest rate goes up and the liquidity is there is a liquidity problem and the economy is going down, right? So and inflation is going up. So I don't want to say this kind of policy or MMT or sovereign money theory should be implemented as soon as possible. I don't think so. We have to think about this because as I said, there is a big gap between our reality. The production power is big, but many people don't have the money to survive. So that is the purpose of my lecture. I don't want to say that MMT and the sovereign money theory should be implemented as soon as possible. And actually, inflation, the regional inflation, there's a lot of controversies. Why there are big the hyperinflation these days? So as you said, some people say that because too much money, like QE, right? So that is the reason why the inflation is going up. I think that's one reason, but I don't think it's enough. As you know, the inflation is, I think the inflation is brought about by the price of energy going up. The price of energy, like crude oil and coal, right? And natural gases. The price is very high right now because of the Ukraine and the Russian war. Right? That is the main reason of the inflation, I think. Not the QE, not kind of too much money in the United States. But there is controversies. We have to study about this. Okay. Let me start. Let us study about this topic. Thank you.
Okay, thank you, sir, for the answer. Thank you.
And question. There are several questions on the chatting, but I'm not sure I have enough time to answer these questions. I will give you answer after my lecture.
Probably the first and second question is almost same, and that probably very interesting issues. Probably we'd like to hear your opinion about this, about the current Chinese yuan.
China become the more power will replace the dollar. I'm not sure. I don't think China become the superpower in near future. Maybe probably more than 100 years later. This is just my private opinion. So I don't think renminbi replace the dollar in the near future. So maybe we need more renminbi to trade with China in the future, right? So maybe you need more renminbi, but I don't think renminbi replace the dollar in the near future. So you have to check the power of the United States and the power of the China, how they changed in the near future. Okay, so to deal with this kind of problem. Okay, thank you. Okay, this is my lecture. Thank you for listening.
Thank you, Professor Na, and I think we will have 5 minutes break, and then we will resume at 3 o'clock. Yeah. You can enjoy the tea time. We have some biscuit and coffee. Please feel free to enjoy them. Thank you.